Have you ever dreamed of getting rich quick, turning a small investment into a fortune overnight? Well, for as long as there's been money, there have been schemes designed to do just that. Master manipulators ready to exploit our desire for wealth. Today, we're diving into the dark and fascinating world of Ponzi schemes, named after the one man whose brazen fraud became the blueprint for financial disaster. From Charles Ponzi's audacious promises in the Roaring '20s to Bernie Madoff, a sophisticated web of deceit nearly a century later. These stories are more than just tales of financial crime. They're chilling reminders of greed, trust, and the devastating consequences when that trust is broken. So, how did one man's name become synonymous with fraud, and how did another perfect the scam on a scale that shattered the global financial world? Let's find out. It's the early 1920s. America is booming, the stock market is soaring, and optimism is everywhere. Into this world steps Charles Ponzi, an Italian immigrant with a magnetic personality and a seemingly brilliant idea. He promised investors an unbelievable 50% return in just 45 days, or a staggering 100% in 90 days. How he claimed he was arbitraging international postal reply coupons, small certificates used for postage between countries. His pitch was perfectly timed and brilliantly simple. He told people he could buy these coupons cheaply in inflation-ridden European countries, and then redeem them for a much higher value in the United States. It sounded like a genius loophole in the global financial system. People flocked to give him their money, eager for a piece of the action. Thousands of investors, from factory workers to wealthy businessmen, lined up, sometimes for blocks, to hand over their life savings. In reality, there was no complex arbitrage strategy. The logistics of buying and selling enough coupons to generate such massive returns were impossible. Ponzi was simply using money from new investors to pay off the earlier ones. This created the illusion of incredible profits, which in turn attracted even more investors. For a while, it worked flawlessly. He became a millionaire overnight, living a lavish lifestyle with mansions, luxury cars, and the adoration of the public. He was hailed as a financial wizard. But this kind of magic act can't last forever. A house of cards built on lies is destined to collapse. As reporters and financial experts began to scrutinize his operations, they found gaping holes in his story. Panic set in. When too many investors demanded their money back all at once, the scheme imploded. There was no money left. In August 1920, the music stopped. Charles Ponzi was arrested for mail fraud, his empire crumbling in a matter of days. He lost everything, served prison time, and was eventually deported, dying penniless. But he left behind a notorious legacy. His name, forever attached to this specific brand of financial deceit, the Ponzi scheme. You'd think the world would have learned its lesson, but fast forward nearly a century, and history did just repeat itself. It exploded on a scale that Charles Ponzi could have only dreamed of. Enter Bernie Madoff, a titan of Wall Street. Bernie wasn't some outsider with a wild promise. He was the ultimate insider. A former chairman of the Nasdaq Stock Exchange, he was a respected, admired, and deeply trusted figure in the world of high finance. Unlike Ponzi's flashy, high-return pitch, Madoff's approach was all about sophistication and exclusivity. His investment firm promised steady, reliable returns of about 10 to 12% per year. Not wildly exciting, but consistent, even when the market was crashing. He claimed to be using a complex strategy called split-strike conversion. It sounded impressive, technical, and frankly, a little boring, which made it seem all the more legitimate. Wealthy individuals, major charities, universities, and even international banks were desperate to get their money into his fund. Being a Madoff client was a status symbol. For decades, the illusion held. Clients received falsified statements every month showing their investments steadily growing. They felt safe, secure, and smart for having their money with Bernie. But behind the curtain, there was nothing. No trades, no strategy, no investments. Madoff was running the world's largest Ponzi scheme, estimated at a jaw-dropping $65 billion. Just like Ponzi, He was using new investors' money to pay returns to the old ones. The scale was just mind-boggling. The end came with the 2008 global financial crisis. As markets tumbled, investors everywhere panicked and started pulling their money out. Madoff was hit with a tidal wave of withdrawal requests, billions of dollars he simply didn't have. Cornered and with no way out, he confessed the truth to his sons. It was all, in his own words, one big lie. The fallout was catastrophic. Fortunes were wiped out, charities went bankrupt, and families lost everything. Madoff was arrested and sentenced to 150 years in prison, where he died in 2021, leaving behind a legacy of financial ruin and shattered trust on an unprecedented scale. So, what makes these schemes so dangerously effective? It's not just about the money, it's about psychology. Both Ponzi and Madoff were masters of manipulating human emotion. They understood that we don't invest with logic alone. First, there's greed. The allure of high, easy returns is a powerful hook. Who doesn't want their money to work for them? Second, and most importantly, is trust. Ponzi was charismatic and convincing. Madoff was the embodiment of Wall Street credibility. Their personas made the unbelievable seem believable. Then comes social proof. When you see your friends, family, or respected institutions investing, you assume it's safe. You think, if they did their homework and invested, it must be a good idea. This creates a powerful fear of missing out, or FOMO. You rush to get in before the opportunity is gone. Madoff amplified this by making his fund exclusive. You had to be invited. This made people feel privileged just to give him their money, blinding them to the many red flags that were there all along. And don't think for a second that these scams died with Madoff. The game has just changed. Today, Ponzi schemes are everywhere, hiding in plain sight. They've adapted to the digital age. You see them in cryptocurrency scams, promising insane returns from Bitcoin mining or automated trading bots. You see them in pyramid schemes disguised as multi-level marketing, where the real money is made from recruiting others, not selling a product. They pop up on social media, using influencers and flashy ads to lure in victims with promises of a luxury lifestyle. From Nigeria's infamous MMM scheme to South Africa's mirror trading international collapse, these scams continue to devastate communities worldwide. The tools are new crypto, social media, AI, but the formula is exactly the same. Fake profits, real losses, and a trail of broken trust. So how do you protect yourself? The lessons from these legends of fraud are timeless. First, and most importantly, if it sounds too good to be true, it almost certainly is. Consistent, high returns with little to no risk simply do not exist in the real world of investing. Second, demand transparency. A legitimate investment advisor will be able to clearly explain their strategy and provide verifiable documentation. If their answers are vague or they use confusing jargon to deflect your questions, that's a massive red flag. Third, diversify. Never put all your eggs in one basket, especially if that basket is one person or a single, mysterious fund. Fourth, ask questions and do your own research. Don't just rely on the word of a friend or a charismatic salesperson. Scrutinize everything. And finally, recognize that greed is the bait. Scammers know we dream of easy wealth, and they use that dream against us. Charles Ponzi and Bernie Madoff were men of different eras, but they were masters of the same illusion. They sold a dream of effortless wealth, built on a foundation of charm, trust, and empty promises. Their stories are a stark warning that while the methods of fraud evolve with technology, the core human vulnerabilities of greed and fear never change. In today's world of instant information and complex financial markets, the next Ponzi might not be offering returns on postal coupons or exclusive access to a hedge fund, but the lure of easy money will always find new believers. In the end, the only investment that guarantees a return is wisdom. Thanks so much for watching. What do you think is the biggest financial scam happening today? Let me know in the comments below. And if you found this video interesting, please hit that like button and subscribe for more deep dives into the stories that shape our world. See you next time.